Hey guys, what's up? Alec back with the daily stock market, and we're seeing craziness in the stock market right now. We saw Amazon up 5%, and then after hours, a drop down to 10% with a rebound to 6%, and then it fell to 10% again. And now we're seeing it jumping all the way back up and all the way back down. So let's talk about what's going on. If Amazon's down 10% after hours, there's probably some big news or something that we have to dive into. And make sure you stay throughout this entire video and subscribe with a thumbs up on this video, because we're also going to be talking about Apple earnings. And we took a call option out for around $200 on the close friends list. It's already up 21%. Plus, if Apple goes up more after hours, and tomorrow morning, this call option could easily be up another 50 to 70% from the after hour movements from earnings, just from a $200 investment. So if you want to get on the close friends list, let me know. Message me on Instagram. I still have some discounts going on from all the red that we've been seeing in the market. I lowered prices for a little bit, but we're going to be hiking those back up. So now is a great time to get in the market, or even dive deeper than you were before and become more of an expert in the stock market. So what's going on with Amazon? First up, we have analysts expecting an $8 EPS earnings per share. We came in at -7, which is a huge miss. $8 EPS is a very respectable EPS and a great EPS, but to come in and miss negative, and you don't even report negative a little bit, like $1 or 50 cents negative. This is a $7 negative quarterly report. So let's dive into it. Amazon says sales at cloud computing unit jumped 37%. So that's good to see, because we saw Microsoft, the cloud computing sector of the business, jumping as well. So it's good to see that Amazon's keeping on pace with Microsoft. We also see Amazon says its advertising sales rose 23%. So if you want to pause the video and read the rest of that paragraph there, we also see Amazon reports loss on Rivion investment. Okay, so this is one I want to talk about a little bit, because if you remember last quarter, last earnings, they reported a huge beat because of the Rivion investment. And that gave Amazon one of its best quarterly reports. So it's funny how it's coming full circle and it's now giving them one of their worst. Amazon.com reported a loss for the first quarter, hit by its investment in the Rivion Automotive Inc. The company lost $3.8 billion in the first quarter, or $7.56 per share. Okay, so you might want to check, because Robinhood reported that it was negative $7.50 per share, but it looks like Yahoo Finance here is saying that it's not negative $7.50 per share. The EPS is just $7.56 per share. So you might want to look into that, because if it's not negative, then it's not that big of a deal. But if it is negative, then it is some huge news, and it makes sense why they're down 10% after hours. We also see that Amazon's operating expenses in North America have been growing at a faster rate than its sales. The company had to spend billions to keep its facilities humming during the up and down of the health crisis. Meanwhile, the total value of goods sold on Amazon's site grew in 2021, grew half the rate that it did in 2020. So that's the thing too, is when we get into these growth type stocks, remember, take Netflix, for example. People are investing into them because of their growth. For companies like Amazon, Tesla, Snapchat, Netflix, people want to see those increase in users or increase in deliveries, increase in monthly active users, daily active users. They want to see it keep growing. And if they're not growing and they have slow growth, then they have to look at a value from a value standpoint and say, okay, if this isn't a growth stock, is it a value stock? And can we justify these PE ratios that it has in the traditional growth valuations if it's not growing like a growth stock is? So once growth stops flowing to a growth company, needless to say, that is a bad thing. We also see that Amazon.com reported revenue growth of 7% in the first quarter, its slowest growth in about 2 decades and 20 years. So that's a big deal. After a period of tremendous growth brought about by a surge in online orders due to the pandemic, Amazon has seen its momentum stall recently as it seeks to deal with inflation, a national labor shortage, and a supply chain disruptions. Sales increased to $116 billion from $108 billion in the year ago quarter, when sales jumped 44%. Okay, so that's the thing too, is people, if they only see like a 9% growth or 8% growth, that's pretty boring for them. If they're talking about Amazon and Apple and those kind of companies, investors want to see like 20%, 30%, 40% growth. So all in all, I'm continuing to buy Amazon. I do, however, have some price alerts. Keep in mind, this is the lowest that Amazon has been in the last year, and the last 2 years, we're at a 2-year low for a stock like Amazon, a big growth stock. So it's very rare that investors get to see this opportunity. What I'm personally doing, I have price alerts set at 2,400. I have price alerts set at 2,300, 2,200, 2,100, and I even have price alerts set at $1,900 per share. And the $1,900 per share, that's the zone where I really want to start loading up on shares for long-term investing, because remember, Amazon's also going to be doing a 20-to-1 split. So for every one stock of Amazon you own in the coming probably 6 to 12 months or sooner, so you'll have 20 shares for every one share that you currently own today. And what we've seen is big tech stocks, whenever they do a big split like this, a 20-to-1 split, it works in their favor over time, over the long term. So I definitely want to get on Amazon before they split so I can get as many shares as possible after the split, and I could hold Amazon for a long time. Okay, I'm continuing to dollar cost average in about $10 per day. I have my load zone around $1,900 per share to $1,700 per share on Amazon to load the boat. Okay, so we talked about Amazon, but what about Apple? So what we see is Apple beats Wall Street estimates despite supply chain disruptions, which is huge. Okay, so we saw them report earnings after the bell on Thursday. They beat expectations on the top line and bottom line, and also reported record revenue despite the continued supply chain disruptions. Here are some important numbers. Revenue was a beat, 97 billion versus 93 expected. EPS came in at $1.50 versus $1.40 expected. iPhone revenue came in at 1 billion over expected. Mac revenue came in at about 1 billion over expected. iPad revenue came in at about a half a billion over expected. And wearable revenue also came in a little bit over expected as well. So they beat expectations in every single category. So overall, I think this is a very good thing for Apple. I think that we'll also see them bouncing back a little bit more. If we look at some trend lines and some support and resistance going on with Apple, we can actually see that it's following this one here pretty close. Here's 1 point, 2 points, 3 points, and then it just hit its fourth point right there, okay? And we can see that it typically goes above this support line a little bit higher, so we can see it actually Apple bounced back above $170 per share. Personally, I think the best thing you can do if you're investing in Apple, or if you don't have a position in Apple yet, is just dollar cost averaging. For example, like $5 per day or $50 a week, or even if it's $20 per week and your budget's smaller, hey, you can even do $10 per week or $5 per week. I know some people that do $5 per week into Apple, and they set it and forget it for the next 5 years or 3 years. And over the next 5 years, they just plan on buying Apple $5 a week, slow and steady. Now, I'm a little bit more aggressive, so I like to do closer to $5 per day or $10 per day. But that's just me personally, because I believe in Apple over the long term. If we see them under $150 per share or $150, $5 per share, I'll be buying a little bit heavier. However, for me to be loading the boat scenario, I want to see Apple closer to that $125 to $130 mark, which I think personally is not out of the question. I think we can definitely see that. And I don't even know if I'll load the boat at even 125. I kind of want to see closer to $100 per share, which would be a 37% decrease from its current price. Okay, which is not honestly out of the question, because look at all these other stocks, for example, Amazon, and the countless other stocks that are at 2-year, 3-year lows, okay, and are down much more than 30%. Keep in mind that Apple's also close to a 52-week high, so it could be a little bit easier for them to go down 30% or something like that. I'm not saying that's going to happen. This is not financial advice. That's just where I have my load the boat zones. However, I'm consistently buying Apple, because right now you can see that it's been focusing on this trend line for the last 2 years. If you look at Amazon's chart in the last 2 years, for example, it's going to look a lot different. It's more sideways and down, where if you look at apples to your chart, which we're looking at right now, you can just see that it's just been following this up and away chart, this trend line here, and it's still in line with that bottom trend line and the top trend line. So I think it's going to be following this, but the thing is that it's already hit this resistance the support 1, 2, 3, 4, about 5 times. So the more times that it hits this support, the weaker that support is going to end up getting, and there's more of a chance that it's going to be going down. Okay, so we don't really want to keep seeing it playing off that support and bouncing off that support. What we want to see is a bounce upwards. But if we don't see that bounce upwards, there's more likely of a chance that we'll see a bounce downwards if it keeps testing and testing and testing that bottom support there. So I hope you guys enjoyed that update video on Amazon and Apple earnings. Smash the like button, make sure you subscribe, and share with a friend if you want more videos like this. If you want to get on my close friends list, here we have success number 5, success number 4. You can see other successful students that have joined the program, over 500 positive testimonials now. Hey man, I bought the call you suggested. Should I sell it? You think there's a good chance for it to run? $168 there, up 64%, $134 there. This guy was down after joining the program. He was up. We also see another student with $378 gains there. And there's hundreds of these testimonials if you want to read all of them. You won't see the green ones there that say the close friends list, because that's for the close friends list members only. But if you see success number 4, success number 5, success number 3, success number 2, you can read all those success stories as well. So guys, thank you for all the love and support that you've been showing to the channel the past few months. I think we're going to see a huge explosion in the cryptocurrency space and the stock market space in the next 6 to 12 months here. So it's a good time to consider getting more involved in the stock market. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.